Warren Buffett, often called the Oracle of Omaha, is a name synonymous with financial success and wisdom.
Chains of habit are too light to be felt until they're too heavy to be broken.
From humble beginnings to becoming one of the wealthiest people in the world, Buffett's journey is a story of patience, discipline, and unrivaled investment genius. In today's video, we'll explore the life and philosophy of Warren Buffett, dissect his key principles, and learn what makes him one of the most successful investors of all time. Early life and background. Born on August 30, 1930, in Omaha, Nebraska, Warren Edward Buffett's story begins far from the skyscrapers of Wall Street. He was the second of three children to Howard Buffett, a stockbroker and U.S. congressman, and Layla Buffett, who was a homemaker. From an early age, Buffett showed a remarkable aptitude for numbers and business, selling gum, Coca-Cola, and magazines to his neighbors, all before he was even a teenager. Even as a young boy, Buffett's entrepreneurial spirit was clear. He saved up enough money from his ventures to buy his first stock, City Service Preferred, at the age of 11. He purchased 3 shares at $38 each and sold them later at $40. But when the stock price soared to $200, Buffett learned his first lesson in investing: don't sell too early. Education and early influences. After high school, Buffett enrolled at the University of Nebraska-Lincoln, where he earned a bachelor's degree in business administration. But it wasn't until he attended Columbia Business School that his true path began to take shape. At Columbia, Buffett studied under the legendary Benjamin Graham, known as the father of value investing. Graham's book, The Intelligent Investor, would become one of Buffett's most influential reads. Graham's approach to investing emphasized the importance of buying stocks that were undervalued, companies with solid fundamentals, and investing with a margin of safety. Buffett absorbed these principles and made them his own, creating a philosophy that would shape his investment career for decades to come. Buffett's first business ventures. After Columbia, Buffett returned to Omaha and started working for his father's brokerage firm. But he wasn't content with the traditional investment world. In 1956, at the age of 26, Buffett launched his first investment partnership with $105,000 from family and friends. The partnerships were incredibly successful, and within a few years, Buffett was able to take control of a struggling textile company called Berkshire Hathaway. Buffett's first major mistake was falling into the trap of managing a company that wasn't aligned with his investment philosophy. The textile industry was in decline, but instead of shutting down the operation, Buffett continued to pour money into it, trying to turn it around. It was a lesson that would later shape his business strategy: always stick to what you know best. The birth of Berkshire Hathaway's modern success. In the 1960s, Buffett turned his attention away from the textile business and into the world of insurance. He saw the power of insurance companies, with their ability to generate cash flow through premiums. By acquiring insurance firms, Buffett was able to create a vast cash flow, which he could then use to invest in other companies. This would be the foundation of Berkshire Hathaway's later success. Buffett's acquisition of the insurance company, National Indemnity, in 1967 would prove to be a key move. With the free cash flow generated by insurance premiums, Buffett could now make more lucrative investments and expand Berkshire's portfolio. It was during this time that Buffett began assembling a collection of well-known companies, including See's Candies, Mid-American Energy, and Geico. Warren Buffett's investment philosophy. Over the decades, Buffett has become known for his specific approach to investing, which he calls value investing. But what does that really mean? Essentially, Buffett looks for companies that are undervalued based on their fundamentals, such as earnings, book value, and cash flow. He invests in businesses with a strong competitive edge and good management. Conclusion. From his humble beginnings in Omaha to becoming one of the richest men in the world, Warren Buffett's story is a testament to the power of patience, discipline, and a solid investment strategy. His impact on the world of finance and business is immeasurable, and his principles continue to inspire countless investors and entrepreneurs. We may never replicate Buffett's exact success, but we can all learn from his approach to investing and life.
But she just stood there with a little water can and just nourished me along and changed me.
If there's one thing Warren Buffett teaches us, it's that success is not just about numbers. It's about values, decision-making, and doing what you believe in.